There are 5 types of financial accounts that everybody, including you, should have. And in this video, I'm going to explain what they are, why you need them, how to use them, and where to get them. The first financial account that you need to have is a checking account. This is your most basic financial account that holds money for you to spend and of course to offer basic financial services. You need this account to have a safe place to store your money, pay your bills, to deposit checks, and to also get a debit card which you can use to buy things or withdraw cash from an ATM. You'll want to keep enough money in your checking account to cover your living expenses. But you also don't want to have too much money in this account because there's better places to keep your money. As a general rule, you only want to keep around 1 to 2 months of living expenses in your checking account. As far as where to get a checking account, there's a lot of great options here, but they almost all fall into one of 2 categories, either a brick and mortar bank or an online bank. Brick and mortar banks are banks with a physical location that you can actually go to. Some common examples here are Bank of America, Chase, and Wells Fargo, but really any bank or credit union near you will offer checking account services. There's also online banks that don't have physical locations, but instead are entirely online. These banks offer many of the exact same services as a brick and mortar bank, such as a debit card, bill payment, the ability to deposit checks, but there are some things that you lose when you have an online-only bank, such as the ability to deposit cash or speak to somebody at the bank in person. Still, online banks are usually a really solid option because they'll have lower or no account minimums and service fees compared to a traditional brick and mortar bank. A couple great banks here are Discover and Ally, but there's also mobile banks like Chime and Cash App if you prefer to do your banking all on your phone. The second financial account that you should have is a high-yield savings account. A high-yield savings account, or HYSA for short, is a place for you to save up money for emergencies and for short to medium term goals such as taking a vacation, buying a car, or maybe a down payment on a house. High-yield savings accounts are almost exactly the same as regular savings account except with one key difference. They pay you way more in interest on the money you keep in your account than a regular savings account. Here's an example. This regular savings account from Chase currently offers me an interest rate of 0.01%. That means for every $1,000 I keep with them, they'll pay me roughly 10 cents a year. If I instead got this high-yield savings account from American Express that pays an interest rate of 0.5%, my $1,000 deposit would instead pay me $5 a year. That's literally 50 times more with a high-yield savings account. And if you're seeing this and thinking, oh well, 0.5%, that's really not a lot, well, you ain't wrong. Interest rates are pretty low right now and you can make a lot more money by investing your money in the stock market, which we'll talk about in a little bit. But you gotta remember that this is mainly for emergencies and short to medium term goals. Unlike with investments, the money in this account is federally insured for up to $250,000, which means there's no way that you'll lose any of the money that you put into it. It's also just mentally easier to manage your money when there's a distinction between your checking account that you mainly use for spending and your savings account that you use for saving. Nowadays, pretty much all high-yield savings accounts are from online banks. And there's a lot of great options to choose from, including those from Ally, Discover, American Express, Marcus, and more. Just make sure that whatever account you end up choosing has low or no minimum balance requirements, no extra service fees, and of course pays a competitive interest rate. Alright, the third type of financial account that you should have is an individual retirement account, or IRA. As the name suggests, this is an account for you to save for your retirement. It's just like any other type of investment account where you can invest in stocks, bonds, etc. But what really makes it great is that you get a lot of tax advantages, which means you'll pay less taxes on the money in this account. That's because the government wants you to invest for your retirement, so they give you tax breaks to encourage you to invest here. With that said, because this is a retirement account, you can't take the money out of the account until you're at least age 59 and a half, or you will incur a penalty. But, you know, it's never too early to start saving for your retirement, and the younger you are, the more you have the power of compound interest to let your money grow over time. This really is one of the best financial accounts that you can have, so try to get the most out of it by contributing as much as you can up to the annual contribution limit of $6,000. Since it's a retirement account, one fairly straightforward option is to invest in a target date retirement fund. This is an investment that automatically invests in a diversified portfolio of stocks and bonds, starting with higher risk, higher return investments, and then slowly and gradually shifting to lower risk investments as you get closer and closer to your retirement date. If this is your first time investing or hearing about target date funds, I already have a video out there for you about investing for the first time. As far as where to sign up for an IRA, many financial institutions offer this type of account, but I've always been a fan of Fidelity, Vanguard, and Charles Schwab. The next type of financial account that everybody should have is an account under a workplace retirement plan. These are retirement accounts that are offered by your employer, and for most people, this is called a 401k. With one of these accounts, you can set a portion of your income to go into the account, and you get to choose what to invest in. In many cases, your employer may also make contributions into this account in what's called a company match, where your company will also put money in as long as you do so as well. Like the IRA, this account also offers you various tax advantages, so you really want to invest as much as you can, up to the annual limit of $20,500. But again, because this is a retirement account, you can't withdraw money from this account until you're at least 59 and a half. As far as getting one of these accounts, since they are employer-sponsored accounts, you'll need to talk to your employer, either your boss or HR, and they'll help you get it set up. Moving on, the last type of financial account that you should have is called a brokerage account. This is just your most basic type of financial account that lets you invest in things such as stocks, bonds, and mutual funds. There's no special tax advantages with a brokerage account, but it also gives you the most flexibility as far as how much you can invest, what you want to invest in, and when you take the money out. If you've been watching my channel for a while, you already know that I'm a huge fan of index funds, which is just a collection of stocks and bonds all bundled into a single investment. But if you prefer, you can also just pick and choose what companies you want to invest in. I've always been a fan of traditional brokerages like Fidelity and Vanguard, but there's also robo-advisors that automatically invest for you from companies like Wealthfront, Betterment, and SoFi. Or if you prefer, there's also apps like Robinhood, so you can buy and sell stocks as you choose. And there you have it. There's your checking account for everyday spending, a high-yield savings account for saving towards short to medium-term goals, a retirement account for, of course, saving towards retirement, and a brokerage account for all your other investing. Now, there are, of course, other types of financial accounts out there, but the ones I've listed today are ones that I think everybody, including you, should have. Anyways, if you like this video, please give it a like, and if you're new to this channel, subscribe for more 5-Minute Finance.